Hello and welcome to the CNBC TV18 special. I'm Shereen, Bhan, and today we're celebrating 25 years of McKinsey in India. Joining us on the program, Dominic, Barton, head of McKinsey Global, and Gautam Kumra, head of McKinsey in India. Gentlemen, appreciate you joining us here and congratulations on completing 25 years in India. Dominic, let me start by asking you, you've been a regular India visitor. I believe your first visit was in 1996.
That's right.
I mean, the country and the economy has changed dramatically since then. I'd go back to a previous interview of yours, I think that was in 2013, when you said that, India has the ability to surprise and get overplayed both on the upside as well as the downside.
Yeah.
From where you see things today, what does the story look like to you?
Well, I think we're now in the surprise on the upside is what we could see, because the scale of the fundamental changes that are underway are very significant. And when you just look long term at what the size of this economy is going to be, going from 2 trillion to 3 trillion to 4 trillion to 10 trillion in a pretty short order. If you're a global company, organization, and you want to be relevant, you're going to have to be here. And I think there's a lot of momentum. And I think that there was, back in 2013, there was, there was a lot of different challenges, disenchantment. I think
Yes.
there'd been too much hype, if you will, and the foot had gone off the reform accelerator. And now it's back on, and that makes it bumpy in the short term, but in the long term, I think it's very positive. So I'm very bullish right now.
What are you most excited about? And you talked about the fact that the reform agenda is back on the table, and in the short term, while we might see some challenges, in the long term, it bodes well for India, whether it's from a formalization perspective, a transparency perspective. What makes you most excited about what you've seen today?
Well, I think there's a commitment to wanting, first of all, to encourage investment, to have the private sector play a role. That's a big mindset play there. And if you think about the demonetization, the GST, and I know it's not straightforward as you go through, but these are fundamentally good things to get done and put into an economy. As you said, the formalization, trying to get more of the formalization of the economy. The ease of doing business, that drop from whatever, 130 to 100, that's pretty significant. Again, it's not where we want it to be, but it's sure as heck in the great direction of movement. And so you're seeing the opening up of sectors, allowing more people to participate, the encouragement of investment to come in, the NPA, what's being done on bankruptcy and trying to work out non-performing loans. Those are all good things, and it's the combination that we talk about Abe having 3 arrows. There's like 7 or 8 arrows here, and I think that's good. So I think it's going to be turbulent in the shorter term as we work through all this, but in the long term, it's very positive.
Okay, you talked about private investment and how that could be the big driver, especially as we see some of these structural reforms playing out. But Gautam, that's the big challenge at this point in time. The private sector isn't really participating in the growth story. It's largely been driven by public spending. Do you see signs of a revival? Do you see the private sector coming back, so to speak?
I think they're all cautiously optimistic. I think you're absolutely right. I think one of the things we badly need in the economy right now is for the private investments to really kick in. I think one of the things that I'm optimistic about is the momentum we seem to be catching on the resolution of the distressed assets. We have more than $200 billion of assets, as you know, in the distressed space, and a lot of it is in power, steel, energy. We see a lot of interest. We are talking to a lot of folks who actually want to find a way to participate in that. And frankly, it may be less muted for greenfield projects, but I think as far as restructuring and taking control of some of the existing assets, I'm personally optimistic about the possibilities in the near future. And I think the next thing is really about putting some more bankable projects on the table. I think our India's issue has never been lack of the macro opportunity. But I think the challenge has always been in really putting the right regulatory framework and the incentives so that the economics of these projects is attractive and bankable.
Right.
And that's what we've got to get right.
But on the distressed assets, and you said that you're seeing a lot of interest, is it domestic investors, or do you also see foreign investors being interested? And there's this thought that the government is working within a committee has been set up, and we don't know whether it will finally go forward or not in the form of an ordinance or perhaps even a legislative change to discourage or even perhaps bar current promoters from bidding back for these assets. Do you think that's a good idea?
You mean the current promoters who own those assets?
Yes.
Yeah. Well, I don't know about the ordinance, but to your broader question, there is interest both from domestic investors and overseas. I tell you, the guys who have the cash right now are looking very good. Obviously, I can't give names for confidentiality reasons, but I know that there are a couple of large private institutions, private families and businesses in India that are right now absolutely on the front foot. And I think there are going to be...
So the family offices are working overtime, is it?
Well, they are, and I must say the lawyers are working overtime and the consultants are working overtime.
So that's always good news for you.
Well, I think it's an opportunity for the country. I think my hope is that if this distressed assets can be put behind us, I think it will open up the floodgates for kicking in the private investment cycle.
Okay, so you believe that the twin balance sheet problem and the deleveraging issue is what is holding back private investments?
I think it is clearly one of the issues. I think the overhang that has stuck in there, and I think the lack of confidence in the banking system to bank creditors, and I think also, frankly, I think the confidence of the business community has been muted in the recent past, but to the point that Dom made, I think the sentiment is turning. And I think one of the things that surprises me, how fast the sentiment turns in this country. I remember in August, I was talking to a bunch of chief executive officers and who were extremely pessimistic.
Okay.
And I am sitting in November and it looks a little different. So I don't know how to make sense out of all of that, but we remain, I think I'm cautiously optimistic.
Okay, you're cautiously optimistic. Dominic, let me ask you about one of the challenges that you see in India, and you have been sort of talking about that over the last few years, and that's the infrastructure deficit.
Yeah.
And now we've got the government saying that, look, we're going to put public money behind this, whether it's roads, it's railways, you know, they're talking large numbers, they're looking at tying up with pension funds, etc. as well, tapping the markets. Do you believe that the infrastructure bet is now an opportunity that's likely to start to play out? Because, you know, if you look at the stressed assets, a lot of the companies that are actually stuck with stressed assets are the ones who were servicing the infrastructure sector. So how do you see that playing out?
I do. I mean, I think infrastructure is a significant opportunity. As you said, the challenge is you can't fund it from the public purse or we'll bankrupt the place. You know, we need private capital in there, and there's a role, though, for public capital. And that's to maybe deal with the first level of risk that's there, or to ensure that there's going to be a long-term viable project, whether it be rail, transportation, ports, whatever. But it's the reason I'm, again, excited by this is you've now got some of the largest pension players in the world who are here. The Canada Pension Plan, Ontario Teachers, they're here looking, and they're 60 to 70-year investors, not 5-year investors. Yeah. And they have a track record with the Australians, with the Norwegians, in doing this in the UK, in doing this in Chile, in doing this in Brazil. And so I think if you have the sort of critical mass of investors who are on the ground, and they can help with the structuring of it in a viable manner. And, you know, we know infrastructure is the single biggest flywheel for GDP per capita growth as opposed to GDP growth. It creates great jobs. Yeah. It makes the economy just work much more efficiently to get goods moving through the system, getting people to be moving through the system. So I think, again, it's back to what Gautam said about bankable projects. We've got to there's a lot of infrastructure that needs to be built. Let's prioritize them. What are the 30 infrastructure projects that need to be done? Let's make sure that they can work from a private capital point of view. And once a few of them get going, you're going to see a lot of more money coming into the system.
So do you see a lot more money coming into the infrastructure space? I mean, you know, today we're sitting on the Mumbai Trans-Harbour Link. Finally, that's moving forward and it's been given out to L&T. But do you believe that this is going to be the space to watch out for and will see renewed interest?
Well, firstly, the need, we all know, for folks like you and I who live here, we see the need every day. I think our estimate is we need about $1 trillion in India over the next decade. Right, so I think the needs are enormous, and by the way, you go sector by sector. You look at aviation, for example. Yeah. I think we need more than $100 billion just in putting up enough airports to meet the growth of aviation in India. It's pretty clear to everybody that the government will not be able to fulfill the need. So to Dom's point, I think the private sector investment, the need is very clear. I come back to bankable projects. I think what we need is the different ministries that are involved to come together in a focused fashion to make the risk return of these projects exciting enough for private investors who have
But do you
opportunity.
see that happening? And I'll just talk about the renewable energy sector because this
Yes.
is being touted as the next big sector
True.
by the government. But when you speak with people who have invested in this sector privately, they
Yes.
talk about the single-minded obsession with tariff and
Yes.
ensuring that the tariff is, pretty much at the bottom, which then perhaps will sort of put a question mark on the risk-reward ratio and the sustainability of these projects in the long term. So how are you then reading this? And what is it going to mean then in terms of actual private participation?
No, it's a good challenge. I think you talked about renewables. I think the government, as you know, has the intended plans to put 100 gigawatts
Yeah.
just in renewables. And you're right. I think the tariffs in India are the lowest in the world. So I think it is a very competitive business. And I think the good thing is at least the government has taken out, it made it a very transparent process. I think that's a good process. But to your point, I think it's extremely competitive out there. I think it's causing players to question.
Yeah.
Right, every element of the cost base and every element of the business model, and I don't have the answers, but I can tell you we're going to have to think differently because the need is there, the market is competitive, which is not new in India. Every place it's extremely competitive. This is no different.
So what's the global lessons perhaps that we could take
Well,
insights
one thing
from?
I was just going to jump in because I think one of the challenges is we have to get it's government and the public comfortable with the charges,
Yes.
with tolls. This is a controversial thing.
It
Now,
is.
In Australia, in Chile, in the UK, in Brazil, the government has played a role in helping people get comfortable. This is what you have to do. In the US, in Canada, it's interesting. There's a lot of tension when you say we're gonna have privatized infrastructure. People say, well, what are you going to
Yeah.
you're going to charge the poorest people will get? There's a lot of challenges with it. But the fact of the matter is we've got to make them, this is the bankable, they have to, if they aren't going to make money, no one's going to put money,
Sure.
so it's just not going to happen.
Sure.
So I think there is a way of structuring the fees and the tariffs to make it work because there are win-wins. And we've got examples of that. Even in Canada where you're providing, it's dual process. There's a toll road, which may be faster and you're going to pay more. And then there's a
Sure.
regular route where you don't pay. So it gives people choice. They have a choice. You're going to be able to go faster here, but you're going to pay for it.
Right.
And that's and the pension funds have invested in that. They haven't in this. And I also think brownfield is an opportunity where government has already built something, sell it, and use the proceeds to build something else. We've got to I believe in that, but politically that can be a challenge. People say, well, what's that? But I think the lesson learned is there's no easy way out of it. You've got to get people to understand. I hate to say, but you have to pay for it, right? And that's going to be the challenge. I think what we have to look at though is the output of what that does to economies. Again, like Australia, Chile, and Brazil. It's done wonders for what